Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading the last 14 years and we're going to check in on the broader market. Is it finally time for daily consolidation after this perpetual grind up? I'm going to talk about a day trade I took, nailing the top in Tesla and what I was looking for. Bit of a trade review. Let's get to the charts. All right, broader market first, then we'll get to Tesla. So S&P 500 futures chart and the NASDAQ cannot be more simple as far as just a guideline. If 4-hour EMA 12 is support, the bulls have complete control. If we lose it, daily consolidation is underway. This has been the guide the entire bounce. We've got 1, 2, 3, 4, 5, 6, 7, and now 8 holds of this level. Identify something where you can make a clear statement where you know nothing changes as long as this is taking place. And then when the thing changes, for example, we're going to get to natural gas at the end. Natural gas has not confirmed a weekly uptrend in years. The first time it happens, it's going to glaringly stand out. The first time futures lose the 4-hour EMA 12, it's going to glaringly stand out. But until that happens, nothing changes. And the bulls keep this extremely impressive move going. So this is a V-shaped recovery. This is what I call a sucker punch with no follow-through. I'm going to do a webinar Thursday, 5 p.m. Eastern, talking all about the sucker punch and how we can use it as just one of the different patterns and ways that markets present themselves time and time again. And here we are talking about all-time highs with the S&P 500, less than 2% under that level. We got today within 1% of all-time highs. So I'm expecting new all-time highs. Nothing's changed on the long term for me. We bounced right off monthly EMA 12. We kept the monthly uptrend intact. If we were going to see something change, it would have had to have been a confirmed weekly downtrend. So that doesn't mean we're not looking for a short-term pullback. After a daily stair step now, we broke the streak. We did just have 8 green days in a row, which was the longest in 2024. We were red today by 0.16%, and bears are hoping that this is a slowdown of bulls tiring that's going to lead to this pullback. It's an indecision candle, and an indecision candle at the top of an uptrend oftentimes indicates a reversal. Also note the volume is dropping off completely. The last time we were talking about extremely tight ranges and extremely low volume, we knew volatility was coming. Took a little while, but then it certainly showed up in a big way. And so we know volatility is coming. This was, SPY just gave us one of the lowest volume days of the year, if not the lowest. 32, it might be the lowest. Nah, it's not, but probably top 5 lowest volume days of the year. And so we know that we're going to see volume spike a bit. It might take a couple of days, but we're going to see volume increase, likely on a pullback. And the next bit of information that I'm looking for is when the futures charts hit hourly oversold, does that mark the daily high or low? If it does, we're heading to all-time highs sooner rather than later. If the bears are going to prove anything to us, they need hourly oversold to not mark a daily high or low. We need to retrace significantly enough to set up a potential confirmed daily downtrend. But the burden of proof is right back on bears. And if we do not see all major sectors, XLF, XLV, QQQ, hitting the low of the day at the same time in the near term, we're heading back to all-time highs. Healthcare sector has been grinding all-time highs 5 days in a row now. The financial sector is knocking on the door. So it's the NASDAQ and semiconductors, which are further from the all-time highs. They lead in both directions. They led the way up. They led the way down. They're now leading on the bounce in terms of percentage. It's one of the better percentage bounces, but in terms of retracement size, we still have a ways to go before we get to that all-time high. So still keeping an eye out for a weekly lower high on the NASDAQ because from where we stand in this moment, bulls would need another 5% plus to get there. Again, it can happen. The daily uptrend is going to be our guide. Same thing. Next hourly, first 4-hour EMA 12 keeps holding. When it's lost, we look to the response to hourly oversold conditions. Does it mark a quick daily high or low where we hold EMA 12 on the daily and then keep going? Or does it not mark the daily high or low and we pull back more significantly? In the short term here, I can't be looking long yet. I have to see daily consolidation if I'm looking long again, and I will be looking long in hourly oversold conditions next time we see them, at least for a short-term trade. Maybe I position, sell partial, stick a stop under that low, try for a swing trade. But in the immediate here, I'm looking bearish, which I did today with Tesla, and it helps that I've been away traveling around Oregon in a van for the last week and a half because I haven't been banging my head against the wall, trying to short, the last few days. This was my first day back. And again, I sit down at the computer. Am I looking long or short? I'm looking short, but I have to have a clear level to be playing off of, because clearly anybody scaling in bearish on this bounce is regretting it in a big way. Have to have a level to play off of. And I need to know if I'm wrong real quickly if I'm trading bearish in this market environment. So semiconductors, same thing as the NASDAQ. We have a ways to go before we get to the high. We are scouting a weekly lower high. Even if the S&P 500 sees a new all-time high this week, next week, we have Powell Friday speaking in Wyoming. But even if SPY gets that new all-time high, still possible for lower highs to happen in semiconductors and in the NASDAQ. Same deal. What's the response to first hourly oversold? We've got a daily stair step bounce now, higher low every day, 9 days in a row. NVDA had a really nice double top today by 12 pennies with the high of yesterday, and then it failed. So that was a nice pullback for bears, for aggressive bears, a little 3% pullback from that rejection. And again, now does this inside bar, now that we have clear resistance, does the inside bar break bear tomorrow to start that daily consolidation and have us head towards hourly oversold conditions? That's what I'm watching for into tomorrow. Bears still have proving to do. So Tesla. Tesla's a bit of a laggard on this bounce. It started weaker and then it finally got a bit follow through. But again, tons of space for that weekly lower high. Don't forget, we're watching this 3-month forever equilibrium. This has been forming now for years, 4 or 5 years in the making. Monster breakout, monster pullback, lower high, higher low. Remember we were looking long for that higher low? That helped us on the longer term time frames. Now potentially a lower high. This pattern breaking along with JETS, the airliner ETF, which is the same similar 3-month pattern. These two patterns are the most beautiful long-term patterns that I've ever seen. And so you better believe I'm watching them into 2025 to see how they're going to break. I just deleted my thing. There it is. So I was looking short in Tesla today, and I know that if I'm looking short, I need a clear level to play off of, and I want to know if I'm wrong real quick. And we started the day with Tesla being a lead bull. Right out of the gate, it was up, 3% plus, and oftentimes, this is where following a name, dating a stock that you're trading and getting very familiar with it is important, because I know Tesla very often has extreme moves in the first 30 to 60 minutes of trading and then completely reverses and gives it back and has, a 5% range from one move to the next. And so I was watching, I look at the hourly and I say, okay, no hourly consolidation yesterday from the low. So we went yesterday from 214 to 222s with no hourly consolidation. So 4%, nothing crazy. But then we start the day with another few percent to the upside. And so at that point, it's now been 6% since our last hourly consolidation. So I then start to get interested. I recognize it's a clear lead bull. Tesla lead morning bull. This is in the first 10 minutes of trading. There's a 1-minute stair step. So I was watching that 1-minute stair step, which lasted the first few minutes of that really strong push up. And I was looking for bulls to exhaust themselves and try and position for that inevitable, eventual hourly consolidation. And so I played that 1-minute stair step. If you don't know what a stair step is, look at Chart Guys stair step video, a whole video on it. So what the trigger is when you break the pattern of a higher low every 1-minute candle, I short and I put my stop over the high of the day. If I'm wrong, then we head right back to the high of the day. I stop out very quickly. And what would I be risking? So the signal for me to short was 227.22 breaking, and I would have risked $1. So pretty much 0.5% on that position. If I enter and we go straight back to the high of the day and I stop out. We didn't. I exited some very quickly because I entered with a full position right away. I'm not scaling in here. This is the trade setup. I enter a full position. I either stop out that full position, I fully know what I would lose, or I don't stop out. And so with 22 seconds later, I exit 40% of that position. So I'm in TSLS, which is an inverse ETF. I exit 40%. So let's say I'm in at 17.13 and I exit half at 17.18. My break even now is roughly 17, we'll just say 17.09. The low of the day for that ticker is 1707. So 1707 aligns with the high of the day on Tesla. So that means I'm risking, I'll give some wiggle room, 3 to 4 pennies on my remaining position if I'm wrong. So this is how I day trade. Full position, exit 22 seconds. Usually it's not that fast, but I was expecting a 1 minute high or low. So exit 40% real quick, stop over the high. I'm risking 3 to 4 pennies on TSLS, and I didn't stop out. That was the high of the day. 50% plus of the time, I will stop out there. The key is, what is my risk versus what is my reward? So if my risk is 4 pennies on this ticker, look at the reward, 67 cents from the low of the day to the high of the day. Obviously, I'm not going to nail the top and the bottom. Take a bunch of that away. 40 cents potential reward, meat of the move. 10 times the potential reward to the risk. I can stop out 3 out of every 4 of those trade attempts, and it's still going to be profitable if that's the risk and reward setup that I get. So I ended up scaling out a little bit more when the low of the day held initially, and then I just kept walking down my stop, or in this instance, just walking up my stop on this ticker, but every time there was a 2-minute lower high on Tesla, I would move my stop, and then I stopped out. So tightening range, broke bear. All right, we've got it. Relative weakness compared to the NASDAQ, looking good. Move my stop, move my stop, move my stop, stop out, solid win. So just a quick example, maybe not quick, but that is how I day trade. And that's how I turn a swing into a swing trade position. If I wanted to hold this one overnight, which could have done, being fairly risk-free, big gap up could make it not risk-free, but I would hold a swing size position. My break even at that point is over the high of the day for Tesla and try and let it play out further. But I do have some bear position in the S&P 500 and the NASDAQ looking for daily consolidation, very cautiously hedged up a bit my long-term portfolio, so didn't want to get too aggressive bearish. Healthcare. This sector, one of our major top 3 sectors, saw no red flags on the big dump that saw red flags all over the place in other sectors. Look at this weekly chart. Is there anything to worry about here? Would you know the market dumped in a huge way? Not at all. Weekly high or low, holding EMA 12, another one holding EMA 12, another one holding EMA 12, all-time highs. It's just a beautiful all-time high run, 5 days in a row, upper wick showing it may be time for daily consolidation, but this is clearly the strongest major sector in the market right now as we're following through from that monthly bull flag at all-time highs. So there was never any big red flag in healthcare, and there's still not. Keep it simple. If weekly EMA 12 is support, the bulls have absolutely nothing to worry about in XLV. XLF, beautiful V-shaped recovery, stair-step pattern of a higher low every single day, 11 days in a row. That's a lot. No, did we break it today? No, double bottom. So now we have a very clear resistance zone that was a double top at the all-time high. We rolled over hard, V-shaped recovery. Look at this previous support zone which held. Look at all this price action. Got right down to it. That was monthly support, I believe. And again, S&P 500 bounced right off monthly EMA 12, kept the monthly uptrend going. So big and scary on the daily chart, you zoom out and say, we're still in an uptrend, and it's looking like that capitulation flush from the yen carry trade is marking monthly higher lows in a blue sky breakout bull market. But anyways, what I'm watching for in the XLF financial sector from here, is this a cup and handle? Is this a 4-hour cup and handle? Possibly. If we break the double bottom at 78 cents the last 2 days, then I'm going to be watching, is this a daily cup and handle? It's not much of a rounded bottom. It's more of a V shape, but what I care about is the psychology of the clear resistance wall, a bull flag, and then everybody that would get stopped out that's been shorting the clear resistance wall. So what the daily consolidation looks like is going to be key from here, and the simple statement will be, if daily EMA 12 is support, a potential daily bull flag is still on the table. IWM, one of the weaker bounces as well. Again, so after everything that we just looked at, which names are most likely to set weekly lower highs? Not SPY, we're knocking on the door. Not XLF, we're knocking on the door. Certainly not XLV. It's QQQ, SMH, Tesla's in there, and IWM. They have way more space for a weekly lower high. So if I'm just looking at probabilities, I can say it's more probable these names will form weekly lower highs than these names. Can distinguish them in different groups. And so IWM started daily consolidation today. It was a lead bear. None of the major sectors that we just looked at broke the low of yesterday. XLF is knocking on the door, but it didn't break. So now the question is going to be, IWM, how much do we pull back? We know there's a lot of space for a daily high or low, anything above 203.82. How much do we pull back? Do we pull back enough to create the space for bears to try and confirm a daily downtrend? Do we pull back briefly, hold the EMA supports here, and see bounce continuation? That's the information that we're going to look for in the next day or two. Crypto stocks, I like how they're tightening up. They're definitely weaker, being more associated with growth than IWM. But we got our low, high of the bounce, higher low, and potentially a lower high shaping up. I am watching Bitcoin to see if I can get a spot where I get a long entry. I did not like how Bitcoin had a bearish correlation to the NASDAQ today, considering the NASDAQ has not even started daily consolidation yet. So that's going to keep me patient. But I like these tightening ranges, and I hope they tighten up into next week. MARA, CLSK, both equilibriums trading sideways here. Coin, crypto stock, overall stronger bounce, but grinding up. First gap up open in weeks, and bears all over that gap up open. Bit of a rising wedge there on the hourly. Cannabis sector, another one, gap up for selling yesterday. This sector is so good about gaps. I'm talking about it all the time on Twitter, but if you sell a gap up open in this sector, if there's not groundbreaking news or unknown news, if you sell the gap up open, it's like a 90% win rate, which is very high. And so we're pulling back in a big way. Are we just setting another weekly lower high? 820 is a double top on MSOS. If we do not break 820, bears have nothing to worry about. At this point, it's looking like the bulls. Let's go to the 2-day time frame. If the bulls are going to change anything, it's going to have to be an inverse head and shoulders. Have to get over 820. If we don't get over 820, we're going to keep fading. And that's that. The dollar. So we were watching for this monthly equilibrium forever. It took a long time to roll over, but it rolled over. And so again, reviewing this as a low, high, higher low, lower high, and we're heading down to key 161 support. And if that breaks, this is a potential long-term top being put in here. That would be shaping up the potential of a 3-month downtrend confirming. When was the last time we confirmed a 3-month downtrend? It's been a real long time. Decades. We broke the uptrend, but we didn't confirm the downtrend. But anyways, I'm still on the monthly. Can the bulls hold that level and keep tightening up? We're heading down real fast to it, and we are in daily oversold conditions. That's the kind of setup where I make a playoff support. Ideally, the more extreme, the more beat up, the better heading into that support. But just watching the daily and weekly downtrend, and the metal bulls are loving it as gold keeps heading to all-time highs. Definitely profit taking today in gold. Gotta keep watching this rising wedge. We have not ruled it out yet, but also keeping in mind that rising wedges and blue sky breakout names break bull far more often than other rising wedges. So still watching it, but 4-hour EMA 12 is support here as well. Trying to hold again. Last few attempts. We'll look for a daily high or low if we pull back from here. So there's no glaring red flags. It's just one of those things where this is a bullish chart. We put our bear glasses on to ensure we don't get caught by surprise on something here. But simple statement, we've been saying this for gold for a long time. If weekly EMA 12 is support, the bulls have nothing to worry about. And we just held it 2 times in the last 5 weeks, and it led to new all-time highs. Silver is trying to act as a laggard. Loved the back test and hold of previous resistance. Now support. Talked about this last couple of weeks on our swing report. It was this zone here. All this previous resistance. Back test and hold it. Break out. Now we're back testing again and holding it. And we will eventually need to confirm a weekly uptrend for follow through, but certainly enough follow through to position very low risk off of that level now. Miners have had a really good run. GDX just hit the highest level in 2+ years. So let's see how long gold can keep that weekly EMA 12 uptrend. Simple statement, again, I'm bullish, silver, gold, miners, as long as gold is holding weekly EMA 12. When it loses it, that'll shift. Oil, that break of this forever equilibrium, I shouldn't say forever, that 3-month one is forever. Long-term equilibrium, year-long, it's close. Another new weekly lower high set, 78.99. And now we're all about 70.50 to see how is this going to break. Probably in August or September. And if it breaks bear, we'll look for the energy sector to follow through bearish as well. Been watching this monthly rising wedge on the energy sector. But oil would need to break bear if we're going to have any confidence in that. Natural gas, again, I'm just keeping it real simple. A little bounce recently, but if we are not confirming a weekly uptrend, I don't care. Give me the first confirmed weekly uptrend in multiple years, and I will make note that something distinctly different is taking place. It's a lot of talking. So some clips here from Oregon. Rented a van for 10 days. Great state. Did a big 1,000-mile loop. Had a lot of fun. And we'll do some clips over the next few videos. Hope you're well. Do good things.